Good morning, traders. It is Thursday, the 28th of May, 2015. It's 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A couple of components to cover as far as overnight news. Rumors that the People's Bank of China ended easing, combined with the margin trading restrictions, have caused the Shanghai Composite to drop 6.5% overnight. The UK Q1 GDP came in below expectations. The Nikkei 225 has had its best performance since 1988. Since 1988, as the yen tests 13-year lows. API inventories yesterday showed the first build of crude in 4 weeks. Came in at plus 1.268 million. We're looking for the DOE numbers today. One instance here. U.S. initial jobless claims came in at 282,000 versus 270,000 expected, slightly worse. Continuing claims 2.22 million versus 2.20 million, also slightly worse. And then other than that, not seeing very much coming across the news line. Let's take a look at what we have ahead of us today. At 9 o'clock, we have pending home sales expecting 0.9%. At 9:30, we're looking for EIA natural gas expecting 99 billion. And at 10 o'clock Central, we're looking for U.S. crude oil inventories. Remember, crude oil, which normally comes out at 9:30 Central on Wednesday, is coming out today because Monday was a Memorial holiday. Again, crude oil inventories at 10 o'clock Central, expecting negative 1.5 million. Cushing inventory expecting negative 700,000. Gasoline inventories expecting negative 1.65. Distillates expecting negative 600,000. And the refinery utilization at 0.002, which seems incredibly low. Today we have Fed's Kosher Lakota speaking on monetary policy in Montana at 1:45 p.m. And then for those who trade the treasuries, be aware that there's a 2-year $13 billion auction at 10:30 Central, a 7-year $29 billion auction at noon. Okay? Let's have a look at the overall picture. Let's review what we've done, what we're trying to do. So, still stuck in this range, and basically we've taken back the move that we had on Tuesday, the first day back after Memorial Day. So what we've done on Tuesday is we sold off from the LVN down to the MCV POC here, this black line. It looked fairly weak, and it looked like it's likely to continue lower, but it did not. We pushed up against the key level here at 95.50. The low is 96. We discussed this in detail yesterday. Then yesterday, the plan was that the expectation for yesterday was that we would likely open in value, test higher. The key area to test, if you recall, was 2108, 2108.50 actually, 2109, this LVN here. And then my primary expectation, all things being normal, my primary expectation is a quick test up, which we got right at the open rejection reverse type open. This looked like a drive here. You can see in the delta below, you can see that there's a driver here, somebody hitting the bid pretty aggressively, causing the volume delta to drop pretty quickly. And that's what I was looking for, a quick drive down to 2101.50 and then chop and then potentially a push down to 94.50. That was the primary expectation yesterday. What ended up happening is we ended up having this rotation down, which looked beautiful, pulling back through to the open, and then it just it started to push through the OS high, the opening swing high, which was 775, and then we got the Greek news. We got the news on Greece right here, caused a very, very large push in the European market. Not a very, very large, but a fairly substantial impulsive push in the European markets, and it caused a 6-point rotation, which is in the second standard deviation of rotations for a 2-tick Renko, and it basically sat here for a while, built some pretty decent volume, a pretty decent compression, basically flagging, and then it continued higher. I actually traded from the short side after the news came out, looking for the not that this is a trading plan, buy the rumor, sell the fact type of thing. I was looking for the information on the Greek news that came out to be refuted and for it to drop back and fall back into the normal course of the auction. That didn't happen, although I didn't get hurt doing it. It did not go anywhere. It wasn't worth the risk. Overall, the market just continued higher, but if you look closely, essentially what we did is we pushed over the last 2 days, very methodically have pushed. We've gapped down, we've moved away from the HVN up here, which was at 24.25. We've moved from this HVN, we gapped down, and we had some what's called initiative selling. In other words, aggressive selling away from value. Initiative selling down to the next key area, this black line, at 94.50. 95.50 actually, and we stopped at 96 as discussed. And then what we've done is we've taken that back and we pulled right back to the upper point of control. And for that reason, I am killing off these other POCs, and I'm only interested in the POC, the MC point of control here at 95.50 and 24.25. So the market very methodically tested the large POC below. There was an intermediate one at 21.10, large POC from below, large POC that's above us. There's also a gap close at 24.50 yesterday, and so and it's stuck in the middle. Overnight since then, it has not done very much of anything. It has retraced back some of what it gained yesterday, but pretty inactive session given the type of action we saw in China and in Japan. It really hasn't done much. It's pulled back to yesterday's IB high and has sat there. The overnight session is showing weakness in this profile. Most of the volume is going off at the low. The market's accepting these low prices, and so we're looking today for, and it's opening in value, although there's no real value here because it is more of a trend day profile. We're looking for for this 21.15 quarter. If you recall, this was the low 2 days ago, and a key area that we're looking for. So you can see it right here, 21.15 quarter. Again, basically, yesterday's action is the same as the action that occurred on, I believe it was Memorial Day. And the Memorial Day Globex session, and overall it's a smaller profile, but overall it looks weakish. So the expectation is for it to try to go higher, but again, seeing a fair amount of resistance above and expecting it to fail to push higher and for it to explore down lower into that 21.12 HVN and potentially getting a choppy day. If you look at the range component, the range and volume component, this yesterday's range was fairly decent. It was just outside of the first standard deviation of 20 and a quarter. Yesterday's range was 21.75, and then the volume dropped off as we would expect for a rally day. Today I expect it to rest. You'll want to, in order to trade these 2 days, you'll want to combine their profiles. These are completely balanced days, these 2 days, and then look at where the major volume has occurred. So you have 3 prongs here, 21, the 21.12.50, like I just talked about, is the next target down, and then once it gets through 21.08.75, 21.08.50, this thin area here, then the expectation is for 21.01.50, and that's my primary hypothesis, is that it's likely to migrate lower, get stuck here in this range here between the 21.19, 21.18 and 21.08.50 for today. I don't expect it to push out of either side. That's the primary hypothesis. I'd be happy to be surprised by this. Remember, the primary hypothesis is not intended to be right or wrong, or to impose an expectation on the market. This is just a plan. It is just what's expected. What the market gives us is a whole different story, but with a plan, at least I have something to compare the information that I have against, so that I can assess the strength or weakness that is playing out in the present moment as we're trading. Without a plan, you don't have a frame of reference, and you're just basically the weak hand in the market. Okay, so again, pulling in this 2-day MC and trading off of the MC as opposed to trading off of yesterday's profiles. This 2-day trading is completely balanced. They've canceled each other. Looking at the Euro Stoxx real quick, the Euro Stoxx have put in a completely quiet sideways pattern with a bullish tendency to it. This looks to me like this area is becoming mature. The profile for this balance zone that started on the 19th of May, the profile of this balance zone looks P-shaped. It's the expectation from here is for continuation up to 37, the 37.55, 37.60. So that's the expectation on the Euro Stoxx. Looking for this to push higher. You can see yesterday's move. This is a 60-minute chart. You could see yesterday's move. It was fairly dead session overnight. Nothing going on in the Euro Stoxx at all. About a 30-tick range for the entire session, and then the news came out and the market moved up 50 ticks in the Euro Stoxx, which is a fair amount of range. And then overnight, last night, it is stuck in the upper HVN and value and has not done anything, and has tried to move into the news-related flow here, the news zone, where very little volume has traded. But overall, it's balanced and it's compressing. If you're in the Euro Stoxx, I would be watching out for a quick break away from here. Let's look at crude oil real quick. Crude oil not able to pick itself off the floor. Just continuously pulling back. So my hypothesis of this pulling back somewhat and pushing up and through 64, the 64 handle, and then starting to work its way up through this thin volume zone here is just not, the market's not ready for that. Crude oil is seeking buyers still, and it keeps dropping lower. So the hypothesis here has not worked in crude. The longer term hypothesis has not worked in crude, and it's starting to move away from the most recent balance zone, which is right here. So this balance zone here was expected to dictate the pullback, but also dictate support for the market to pull back to and then ignite another move up from. And it's just not able to do that. It's not able to get off of the sell side. So crude continues to drop despite the fairly decent setup to pull back and push higher, but it does not look ready to do so. Crude again is tied to the dollar. If you superimpose the U.S. dollar against crude oil, you see that there's a pretty decent correlation there. Commodities and U.S. dollar movement are correlated because commodities are traded in U.S. dollar terms. I'm over my time. It's 8:17 now. I've been on for 15 minutes. I did want to talk about a very important thing, and that is failure, which is something I discussed in our Stage 5 chat room a couple of days ago, and it's an important thing to look at and to be mindful of. Most of us escape our losses or resist our losses or fear our losses because of this component, the component of failing or not being, pursuing something that you may be passionate about, but having to confront the idea that you may not make it. I wanted to discuss that, but I'm out of time. Maybe some other time. And also, next week, next Friday, not this Friday, next Friday will be the public Ask Me Anything webinar, and I'll be able to discuss it then. Okay? Good luck today. Watch your risk as always, and also keep an eye on the news. There's a lot of chatter going on about Greece, and it just continues. Good luck. Take care.